We are back here on Real Estate Talk Boston, joined by one of our power players, Bryan Joyce from Grand Coast Capital. Bryan, thanks for stopping by.
Yeah, thanks for having me. Yeah.
You guys focus, for the most part, on hard money lending. So why would somebody choose to go down the path of hard money?
Sure, someone's going to go for a hard money loan because it's collateral based, so that it's not really as much credit driven. Maybe they need to close fast on a property, maybe inside of 30 days. They can't wait for a bank appraisal. Not always a credit thing. A lot of our borrowers are A-paper borrowers that could go to a bank. It's about speed. Maybe the property needs renovations. It's not financeable from a bank because of it's distressed. So they'll come to a private lender like us who can underwrite the deal in maybe 5 days. Without the appraisal and get it done. So they can get in, fix the property, put it on the market and sell it, or go to a traditional lender and refinance to keep it.
Okay, now coming from the traditional lending side, I know enough about your side to be dangerous, but first off, no primary residence, has to be investment property.
Yeah, it would have to be an investment property. So owned in business entity, LLC, S Corp, maybe a trust. And then if they refinance, they could always refinance into a personal name. People do sometimes decide, they get in, they fall in love with the property, and they think, I actually want to keep it. They can't live in it during our loan. If they pay us off, and with a traditional residential loan and move in, that's fine. Just during the life of our loan, they can't live there.
Okay, interesting way to acquire a fixer-upper, right?
Yeah,
you can
absolutely.
Buying it as an investment and then flip it over.
Yeah.
Application process, similar to the traditional mortgage lending, or?
It is. I mean,
different?
we'll ask for a loan application. We will ask for some financials, not to dig in and determine ratios. It's more about, verifying, okay, you have X amount of assets that you listed on the application. Does the bank statement check out? It's the simple stuff, simple verifications. Like I mentioned, we don't do the appraisal. We'll ask a borrower for comps. We'll do our own search online and
You'll ask the borrower for comps.
Yeah, well,
Interesting.
because if a lot of our borrowers are realtors themselves, so they know the market. A lot of them are experienced investors. They know which comps as they're looking at properties. They know the house down the street sold for some amount comparable to their house. And then we'll kind of weigh the two between what we find and what the borrower finds.
Okay,
and pick that.
On the traditional lending side, it's a lot more strict, I guess you could say. I always call it the three-legged stool. You have income, assets,
Sure.
and credit, right?
Yeah.
On your end, you are pulling a credit report, or you're not even looking at it?
Yeah, we do pull credit. Again, not to dig into the details. If they missed a car payment a few months ago, that's irrelevant to us. What drives it for us is the score itself. We have a risk-based model for pricing, for pricing in terms of interest rate, as well as the loan-to-value ratio. So what's our loan amount going to be relative to the value? The credit score itself, so somebody in the mid-600s is probably, sort of the par rate. Somebody in the 700s gets probably a 0.5% discount. Somebody below will get, maybe a 0.5 point more.
And in full disclosure, with hard money lending, it's called hard money lending for a reason. You're not talking conventional mortgage rates. They're significantly higher.
So, yeah, they are higher. Typically, we're in the 12 to 13% range, interest only, 2 to 3 points for 12 months. But when you compare between if somebody's getting into a flip, maybe they only own it for 6 months. If you compare what they paid for 12% versus 4 or 5%, maybe it's $5,000 or $6,000, maybe $10,000. But in order to get into the property, if a bank won't finance it and they don't have the cash, the hard money lender is there to help them get in and make money on the property. Otherwise, they may not be able to do
They're
the
not
deal.
going to be able to do it,
Yeah.
sure.
Yeah.
You guys definitely do some stuff outside the box. Is there a lot of stuff outside of your typical multifamily purchases that you do in this market?
Yeah, Grand Coast is known for sort of a variety of loans beyond just the single family fix and flips, which are pretty popular these days on TV, the multifamilies. But we've done, hotels, industrial buildings, pretty much any real estate we'll look at. The other thing in terms of getting creative, we'll cross collateralize against other properties. If somebody maybe doesn't have, the classic line, equity rich, cash poor, we can use the equity from other properties in lieu of their down payment.
Very cool.
And tie them up that way.
That can make a difference. Opportunity in the greater Boston area. What are you seeing most investors on the real estate side invest in today?
I still see the single families, the fix and flips, multis, condo conversions. They are still out there. They're certainly harder to find. I think people are getting creative, doing mailers to homeowners, networking with other investors maybe that tie up the property, called wholesalers. The wholesaler will tie the property up and then assign the contract to someone for a marginal fee. The days of getting on the MLS, Realtor.com and Zillow and just going to look at a property are kind of behind us right now.
With your side of the business, for sure, that you have to be ahead of the curve, knowing where that next deal is coming, because it's going to be there only for a second, then it's gone.
It is, and the investor really needs to know, if I'm going to look at this property, what's my funding source? Is it a hard money lender, private lender like us? Do you have the cash to do the deal yourself? Are you getting it from an investor? If you don't know that before you go look at the property, you're behind the eight ball.
Do you ever see anybody deals that just go bad? It's tough to watch. It's like, oh, geez, these guys came in, they thought they were going to do X, Y, and Z, and the deal goes upside down on them? Because you hear those horror stories occasionally. You
do, and we've had conversations with borrowers where we've said, you think it's worth X, we think it's worth Y. We're willing to do the loan, but we want to make sure we're on the same page. And you kind of see it coming. It does happen. I think, the common mistake is value, thinking maybe it's worth 300, and you fall in love with the property and you think you can make it worth more than it really is.
Yeah.
And then it winds up selling for 250. I think that's a common mistake. So it's all about, what is it really worth? Almost discounting it. Don't think, oh, I'm going to make it, I'm going to create the top sale for my neighborhood. Take the conservative approach. And if you make more than you thought, that's great. But at least you went into the deal, under where you thought you'd be. Yeah.
For the real estate investor that's just getting into the business, or for the person that's watching that says, you know what, I haven't done a deal yet, but I'd like to get into it. I know you're on the lending side. Are you aware of any resources out there where people can learn about real estate investing?
There are. We're tied to part of a group called Fortune Builders. It's nationwide. They do seminars and classes, and they give people the tools to analyze deals, find deals, structure the deals, and then we can come in as the lending source. So Fortune Builders is very popular nationwide. And then there are other local real estate investment groups called REIAs, REIAs. And, those are kind of in different spots around the country. They do the similar thing. They'll bring in experts, a title attorney, a lender, an insurance guy, and teach people all the aspects as well.
I'm sure you see on your end a lot of repeat clients where that's what they do for a living, fix and flip, and you're their guy.
Yeah, we do. I mean, and those are the ones we love to work with because it takes out the sort of upfront analysis of the borrower. Once we've worked with them, they've created that track record. Now it just becomes, let's focus on the property.
How many
speeds the process up.
How many homes can somebody flip in a year? Just out of curiosity. I mean, you must see some situations for those guys that just crank them out. Can you do a couple in a year?
Yeah, we have people that do 8 to 12 a year.
Oh, wow.
Yeah, and I've heard of people that do 40 or 50. And I think it's all about building your team.
Yeah.
A team of contractors, a team of your lenders. I have a lot of borrowers that use us as well as other lenders because they don't want to have just one pony to go to, one horse in the race. And that's fine. And, if they can do maybe 8 to 12, so they're always closing on one to buy it. They always have one in the middle, sort of in the middle of the process, and selling another. Kind of 3 going on in different stages. Yeah.
Interesting.
But it is all about having a team behind you.
Well, you guys do a fantastic job over at Grand Coast Capital. And if you'd like to reach out to Bryan and their team over at Grand Coast Capital website to go to?
GrandCoastCapital.com.
That was easy.
Yeah,
right?
it's easy.
And remember, if you're looking for more real estate tips just like this one, you can reach us right here on Boston.com.